We meet in an hour of change and challenge, in a decade of hope and fear, in an age of both knowledge and ignorance. If this capsule history of our progress teaches us anything, it is that man in his quest for knowledge and progress is determined and cannot be deterred. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win.
Welcome to another episode of the Energy Impact Podcast. Our guest today is Cheng, the founder and CEO of CelerateX. Jason, great to have you on.
Thanks, Michael. Thanks for inviting me on the show, and I'm really excited to be here.
Great. Yeah, can't wait to hear about all the important work you're doing. But first, tell us a little bit about you. Where are you from?
So I grew up in Australia. So I had first-generation immigrant parents from Singapore, studied economics and econometrics. But actually, Australia was a great place to grow up in. Was it the 80s and 90s?
And where in Australia? Is it in Sydney or in Perth? Those are right. Like,
oh no, Adelaide, and then Melbourne, and then Sydney.
Okay.
So I made my way around. No, in Australia, as you know, you've got fantastic beaches, great weather, lots of sport, and it was great time to grow up. But I'd say, just in terms of what led to my initial spark in thinking about the environment, it was at the time, as you know, the ozone layer was the big talk of growing up there. You had to put on a hat and sunscreen, and as a kid, that's the last thing you wanted to do, right? But it was very clear from an early age that when you had this link between human actions, CFCs, and then hole in the ozone layer, and skin cancer and sunburn, that was, a very direct cause, but also led to quite a lot of people around my age, understanding about the environment and getting involved.
Interesting. I don't feel like it was as talked about here in the States the same way. Like, do you think Australia, I mean, it's particularly outdoorsy sort of culture. Do you feel like that's different than other people that you talk to around the world?
Yeah, well, I think the hole was almost directly over Australia and the Antarctica, so we got the brunt of it.
Okay.
But and I think also the other side of it, growing up, was there was a solution. They had the Montreal Protocol, which was when the world banded together and decided to phase out CFCs. And so not only you had a human-made problem, but you also had a human-made solution. So it actually gave people, particularly my generation, hope that you can actually change these things, which I think is a really good success story that, as you say, is not really talked about that much today, but is a good example for the challenges that we face going forward.
Yeah, no, that makes sense. And then you said econometrics. How did that dovetail into sort of your outdoorsy nature? Like why not engineering or policy or?
Well, it didn't at all dovetail. So
was it forced by your parents, or that was like what everyone was doing? Like, what was the route?
Well, it was quite different, actually. My father was a doctor, so for a long time I was going to be a doctor until as you know, in year 11, you have to cut up a rat, and I decided this is not what I wanted to do for the rest of my life. My mother was an entrepreneur. She'd been buying, building, and then selling businesses for a very long time, and I saw that. But actually, I liked economics because, again, it had this impact of having ideas which could have system-wide effect for improving human welfare and human behavior. And so that I really wanted to be an economist. So I studied economics. Then over summer, I was enrolled in my honors year, was applied for a job that I heard of when I was traveling in Sydney for holidays. And it was an economist job. I applied, didn't get the job. It was filled internally, and they said, well, we have this other opening in investment banking, so why not go try that? I asked them, well, what is that? And they said, we can't explain it to you. You just have to go and apply and do it. So I got the job. And so I just terminated the honors year and then went straight into work at that point in time. And so there it was, launched into the heady world of hostile takeovers, which was great training for a 20-year-old, because you're all of a sudden around boards of directors, CEOs, CFOs, and very few jobs, I think, give you that exposure at such a young age to the corporate world. And I think in takeovers, you learned one thing. I mean, hostile takeovers was all the rage back in those days. And the good thing is that the result was very clear. Within 4 or 5 months, you either won or you lost, or you increased the offer price. But you had to be, well, I think what I learned was all about what adding value really means, because everyone talks about it, but in a hostile takeover, you often have to innovate a new strategy or unlock some value or do something differently in order to win. And the market is the judge whether or not it worked or not. And so the results are very clear. It's not about adding more capital because it's an advisory role. So you have to create something and innovate in order to be successful at your job. And so boss was always saying, okay, it's about how you add value to a situation. And I think a lot of that filtered through into when we formed the private equity group, that it should be more than just adding capital. It had to be about how you add value to a situation. And I think the other aspect to that training was you really had to be creative and innovative. The market saw whatever you did, the market saw it, and then you couldn't do it again, right? So the next takeover, you had to come up with something new, or else nothing would work. So there was this constant pressure to be, creative and innovative, or you didn't get paid, basically. But I was in the energy and natural resources team because that was about 30% of the Australian stock market at the time, and TMT, telecoms, media, technology, partly because my family was involved in that area. But also, I think DCF modeling was common to both natural resources and telcos at that time. And I think that also gave me quite a good perspective, where in those days it was the old economy, natural resources, and then the new economy, the first internet boom. And it seemed like the two would never meet. And they're almost contradictory if you're involved in both at the same time. But I think today, when you look at energy transition, you really need to understand innovation and technology as well as the energy sector. And I think a lot of people we come across understand energy, but don't necessarily understand technology and innovation. And similarly on the tech side, there aren't a lot of people that understand the energy market in particular. So that also, I think, fashioned the way that we came to our own strategy within energy transition. So I hope that gives you a bit of an evolution of thinking.
I've got like 4 or 5 lines of questioning, but I'm going to start with the first one, and then we'll tick down the boxes. I think you said this quite quickly. Did you stop your schooling to take this job? You said, I'm not going to finish, or I'm not going to do. So there was something that you said, like, oh, I'm just going to get on with it.
No, I graduated, but in Australia, you could do an extra year, honors year in research, which I was going to do, but I didn't. So I just graduated with a normal degree.
Just had yeah, that's so funny. I have a similar story. I was doing my master's degree in engineering and decided to just get, had an internship that I loved and just said, I'm going to get on with it. So I just caught that in your story. Okay. So you said, okay, I'm going to jump in. Econ's cool, but I'm going to get into LBO modeling. And yeah, how did you know where to begin? I mean, did they have a cohort and training, and do you have some mentors that helped you out, or you walk us through that process?
Sure. Well, the training was very different, I think, to what it is today, because in those days it was really 2-person teams. It was a boss and junior burger.
Wow. You were right on the front lines.
Exactly. So you did everything. You did the modeling, the valuation, negotiation strategy, the structuring, dealing with the media, all that kind of stuff as well, together with one other person. So Yeah, it was great exposure. They did have obviously a formal training program like all the big investment banks do, and that did help quite a lot because I was as more economics than finance. But it was a great time. It was at Schroders, and some of the smartest people that I met. Most of them had studied classics actually, so they were trained all internally from doing ancient Greek and Latin to knowing how to model up by the end of 6 months.
I do have a theory that any non-finance degree brings a perspective like what you talked about, being a little bit creative and always having to think about the next thing. You can teach anybody algebra, right? And not to diminish like the actual like deep finance, but yeah, I have a bias that having those other perspectives is super valuable.
Absolutely.
What was your coolest? I mean, you talked about, I don't want to spend too much time here, but what was your coolest structuring deal? Like what is the one that you remember the best from that time?
Oh,
Take you all the way back.
too difficult to say, I think. We did, there was one, a two-tier structured bid where at different acceptance levels, you get different offer prices. So that was the idea, was to try and cascade acceptances. But effectively what you ended up doing was dropping the bottom tier and going to the upper tier as the raise in your offer price. But I think it was maybe a bit too nuanced at the time, but that was the idea.
Yeah, it's there's a real fine line, I think, from innovating and like kind of getting over levered, or right, like you get too innovative, you're getting and you're probably mispricing risk. Not innovative enough, you're not competitive, right? So that
No, absolutely.
Okay, so you're on the front lines, you're seeing all these unique transaction structures, and then you sort of glossed over creating a private equity fund. Like, how did that? And is that Kerrigan or is that a precursor?
So Kerrigan was formed from the same. So this was at JP Morgan Energy and Natural Resources team there that effectively spun out to form Kerrigan, which is an energy-focused private equity firm. And then later on, CelerateX was formed as the energy transition platform of that business. So the team had been involved in that first huge wave of growth in energy demand and natural resources demand out of Asia across the 2000s, where a lot of the Asian economies were consuming huge amount of resources globally. And the team was in the middle of that trade, if you like. And so the inspiration for the first fund was really to capture some of those capital flows, identify the infrastructure, the assets, the projects, and the teams which were a bit younger but could grow rapidly and then feed into that wider energy growth and demand.
Amazing.
And so
tell us about that process and evolution.
Yeah. So obviously at that point in time, the Asian economies were buying both a huge amount of resources, but also paying very high prices. So at that time, when we could identify
what years, sorry, what you may have said it, but what years?
Well, that whole wave, I suppose, was early 2000s to around 2007, 8-ish, which then led to
hot market, high oil prices, and developing Asian economies.
Yeah, absolutely.
Okay, cool.
Yeah.
Cool. You're in the perfect time, perfect spot.
Yes. Obviously, that changed over time. That was 15 years ago, and different trends. And so then energy transition obviously was a theme. We're involved in investing in energy transition 1.0, which was really partly coal gas switching in those days, and the growth of the LNG market, as well as the 1.0 renewables growth. So that kind of led us into the whole net zero decision. We were investing quite a lot in Europe by this time, and around, I think, 2019, the UK had committed to net zero carbon. At that point in time, we sat down and we thought, okay, we decided to form a dedicated platform, which was CelerateX. And the meaning is to accelerate exponentially the path to net zero. So recognizing that reaching net zero needs speed and scale. But the original rationale for this is, we sat down and we thought, what does net zero mean? And maybe this goes back to my economist training, but when we thought about net zero being an economy-wide transition, that every industry, every company, every piece of infrastructure had to go carbon neutral by a certain date, then you needed economy-wide regulation, carbon pricing, or regulation as they did, phasing out the sale of new ICE vehicles in exchange for phasing in EVs and so on. So we thought, okay, this is going to be quite transformational for the whole economy, not just increasing the proportion of renewable energy, but also fundamentally changing the way we operate, the way we procure, the way we consume. And so we sat down and thought about this and thought, okay, we need blank sheet of paper approach. And what's going to happen to the various different industries? How are they going to transform? Which industries are moving? And what skill sets do we need to be able to capture this opportunity? We also, at that point in time, knew the GE team in Asia as well. They were the only other team that were investing in energy at the time, and had very complementary and quite different skill sets. So more in manufacturing, we were more heavy industry and infrastructure and large project execution. They had more light industry manufacturing. They've been involved in 1.0 as well through hydro, nuclear, wind and solar, as well as having specific specialisms like aviation and transportation. So we decided to merge with them, and including adding some senior executives across Europe and the US as well to round out the input. So we decided additional skill sets, teamed up, formed this new platform, and then the strategy was really about this speed and scale. So it's been focusing on the industries or the verticals or the companies that could have an outsized impact on decarbonization as they scale with net zero regulations. And by scaling, they also can generate returns for our investors. So in the same way that we were growth investors with the whole growth in Asian demand, we could see being growth investors with this change in regulation as well. So we're always looking for these fulcrums of change where we can have an outsized impact. I mean, we're only $2 billion under management, so still relatively small. So we look to punch above our weight in terms of industries that can have that bigger impact, both financially as well as in terms of decarbonization. So that philosophically and structurally led us to where we're at today.
Amazing. Yeah, go one level deeper then. Tell us about, if you're willing to share, what are those industries? It sounds like you do maybe proactive thematic sort of investing a little bit. So what are those industries that you're looking at? And what are those sort of market caps or features that you're looking for in a platform that tells you can identify? The real question is, how do you identify that fulcrum, right? Because that's where you can create outsized return.
Sure. So, I mean, the thematics are obviously clean power. So things like geothermal, floating offshore wind. We're looking at SMR, nuclear, those sorts of things. So more on the base load and higher uptime. We're looking at renewable fuels, chemicals. Then there is the sort of battery ecosystem. We've identified that as a supply chain bottleneck for energy storage as well as EVs. And then finally, the transformation of the traditional energy sector and to decarbonize. So looking at how you can repurpose oil and gas facilities and infrastructure into hydrogen, carbon capture, those sorts of things. So they're kind of some of the thematics that we're looking at the moment. But you're right, what we focused on historically, and this was true for the GE team as well, is being deep sector specialists. Our focus is really looking at the trends, the opportunities, not too early, not too late, but probably a couple of years ahead of I suppose the wider market, identifying those opportunities, looking at where to play within the value chain, which geographies are most attractive at any one point in time, and then speaking to all the various players in that particular space, getting to know them, strengths, weaknesses, and so on. Or in some instances, a company doesn't actually exist, and so we have to back a management team to build one. So typically, you're right, we're usually knocking on people's doors before they're knocking on our doors as a result. And if you're early or earlier to a particular theme, then you're generally able to find the higher quality assets and the higher quality teams, and work with them to define the strategy going forward, than competing with everybody, for the same kind of assets. I think when we think about so one is the themes, but the other, I think, important thing are the people, as well as the quality of the assets. And in terms of the people, obviously there's a whole range of considerations, but we're always looking, I think, fundamentally for three key things. One is excellence, two is passion, third one is compassion. And what do we mean by that? I think excellence, as I mentioned, we're always looking forward to work with the best people who've got the best assets, the highest quality assets, who do very good work. In terms of passion, the targets that we set ourselves, the targets that they set themselves to scale and to grow and to have this amount of impact, it's not an easy task. So if people are passionate about what they do, and they're really enthusiastic about it, then reaching those objectives and targets is a lot easier. And the third one, compassion, that's really about the way people work together with their stakeholders, mutual respect, taking into account other people's interests, be they within a firm, treating employees fairly, suppliers, customers, regulators, investors like ourselves, because in order to scale an industry, particularly a newer one, you need an ecosystem. You need support from the whole ecosystem, the supply chain, the regulators, the local community, in order to scale rapidly. If you're trying to do it alone, chances are you're going to be a lot slower, and you're going to have a much more difficult path. So having that broadly partnership approach is really important for us.
Amazing. And how do you evaluate? A lot of people talk about the team, right? I mean, that's a common refrain. I love that you've identified the actual traits and are able to speak so succinctly to them, because that means it's really a part of your process. But how do you evaluate that? Do you have a I know some investors have EQ tests, right? Or they do, they have a psychologist on staff, or is it just more, do you have a list of questions that you ask over the diligence process? Or is it does your team come together and rank how they think the team measures up on those metrics? Or what's the process to evaluate that?
Yeah, I mean, a lot of it's obviously track record, reputation, and due diligence, but really it comes to working together. So before we make an investment, there's usually quite a long period of due diligence where we're understanding what is the strategy for the business, how we can add value to it, how we can de-risk it, how we can partner with them. And so it becomes a joint discovery exercise. And if you're working together with someone or a team over a period of time, you kind of get to understand how they think, how they operate, how they work. Are we all aligned on the objectives? And for us, it's also important that we add value, as I mentioned before, to a company, so that it's not just about capital. We will look for the areas where there is risk in their business model, which we might have seen, again, given that we're a private equity firm. A lot of it's a repeatable process. So usually the problems that they've encountered, we've seen before in some other context or some other country. And it might be revenue growth, or a government offtake arrangement, or it could be some regulatory interface issue, or a bolt-on acquisition, or an investment that might be needed in the supply chain to debottleneck their processes. So there'll be some area that we can work jointly together on, and identify. And so by the time we invest, we all know what we're doing and we know how to do it, we're aligned, and then we move forward on it. So I think partly it's being sector experts, you generally tend to know a lot of people, and so there's a reputation effect there, as well as just practically working together with people.
That's interesting. I'm going to challenge one aspect of that, and this is not always true.
Mm-hmm.
But yeah, how do you weigh in this disruptive sort of step change environment that we're in? How do you weigh sort of experience and historical perspective versus it really take everything you mentioned, or a lot of what you mentioned, take something new, right? It takes a new way to think about it. It takes, instead of sort of business as usual, marginal price commodities, right? There's requires a different lens, or looking at a problem a different way. And so how
Yes.
do you sort of include that aspect against this excellence/experience sort of metric?
Mm-hmm. Mm-hmm.
I don't know the right answer. This is like a
Yeah.
question that fascinates me because I've seen it go both ways, right? Where
No, you're right.
experience that they've seen all the holes, they can look around the corner, or experience where they're literally just standing in the hole and they can't get themselves out. You know what I mean?
Yeah. Yeah. So innovation and change is one of these things that has to be in the DNA somewhere, because if you're able to adapt, if you're able to pivot and move with the market, then you've got a business that is agile but can also last over a long period of time. So you do need a certain level of expertise, particularly in execution, to be able to do that. You also need to be able to think broadly. So it's almost being ambidextrous, I think, is the answer. You need to be both.
Yeah.
You need to be good at execution, good at what you're doing, understand the market environment, but be open, have an open mind, a learning attitude, to being able to evaluate different information, new experiences, new technologies, and evaluate them without prejudice, so that you can take a particular idea or technology in a team sense to the best idea it can possibly be, and then evaluate it in the cold light of day and say, well, does it work? Does it not work? Try it out. And then when you try it out, you have to execute with excellence. But then when you're getting the feedback, then you need to have the open mind to say, it worked, it didn't work. We can learn from this, fail fast. Let's not spend a lot of money with this particular thing. It's data that we're gathering, rather than it's a failure, we're going to stop, this is not. So there's, if you like, excellence for us means you don't want an error in the model.
Yeah, right.
That type of mistake is not the type of mistake that you want. But if you're trying out a different approach or a different business model because you're pushing the boundaries of a particular industry, and you try a little bit a little bit further than your comfort zone, you get some feedback, you iterate, you change, and you might fail if you go too far, and then you rein it back in a little bit. That's a kind of experimentation or failure, if you like, that we should welcome and encourage.
Yeah. I had a mentor. This is a framework that I'm testing out. So I don't know if it's the right way to think about it, but I was talking about this with a mentor of mine. And I compare it to the balance of like spending time on getting 1% better or spending time on the 100x business opportunity, right? And I think, I hypothesize that the right blend in a scale business is like 75% getting 1% better and 25% like on the step change part of the business. And it's like kind of like the Google, like take a day, a day a week or so spread over time, thinking about like what could fundamentally change the trajectory of the business. And the rest of it is on sort of what's in front of you, execution. And maybe that's different based on where you are in the company, but that's sort of that's what I'm hypothesizing and talking to people about.
Yeah, and I think you're right. Most of what matters is execution at the end of the day. There are a lot of fantastic ideas out there, but they're either poorly executed or usually they're poorly executed. So as you say, those incremental improvements, ultimately those quantitative changes ultimately can become a qualitative change and a breakthrough. But executing well, implementing the business plan, meeting the objectives is, I think, absolutely, you're right on the button there. That should take up the majority of your time.
And then as investors, like what's your how many active investments do you have now, and what is your ability or impact? Like how involved are you then in those businesses? Like quarterly board meetings or monthly, or does it differ?
Yeah, so we're a typical portfolio per fund is, call it 6 to 10 portfolio companies, so fairly concentrated. We tend to organize by vertical or by platform. And so we tend to be quite deeply involved in each of those. So we can't really take on a huge range of different opportunities because each one requires so much attention. If we are going to be engaged operationally in de-risking a business or helping to add value, then it does require quite a lot of attention from senior leadership all the way through the organization.
Yeah, no, that makes sense. Okay, cool. Tell us about what you're excited about for the future. Like, what is, out of all those themes, all those trends, like, what is the one that you tell people about at cocktail parties? Because you think it's a big one.
Well, it's kind of difficult to pick because we're invested across so many different areas, and they're all good. And I don't want
to. I'll rephrase the question so it doesn't feel like you're picking a favorite child. What is one? If I pick one that you're excited about, that you think is not being talked about enough.
Okay. So renewable fuels and chemicals is an area. So when you think about transportation share of energy and you think about electricity or power, they're about the same in terms of energy consumption. The amount of investment and attention and discussion that goes on around power and electricity is huge, but the amount of discussion around fuels is proportionately very, very small. And when you think of transportation, yes, there is some of it being electrified, as we know, but it needs a lot more solutions. So we're quite excited by renewable fuels. It's a drop-in, so sustainable aviation fuels, renewable diesel, and so on, cellulosic ethanol. So these things don't require any change to infrastructure or equipment, and therefore can save quite a lot of time, have a carbon impact today, but also save a lot of money. And this is an area where there is proven technology, HEFA technology, for example, which we're invested in. And the mandates out there are huge. I mean, this is a massive growth area. I think the EU indicated something like 85% of aviation fuels has to be sustainable by 2050. And it's 100x growth in demand over the next to 2030, from a base of about less than 1% today. So you've got this massive explosion in demand for sustainable aviation fuels. We're invested in one of 3 in the world who are currently producing from 100% waste. There will be more over time, but when you think about the amount of attention that fuels has had versus electricity, and the margins in fuels is generally higher, given that electricity tends to be regulated, you would think that there's a lot more attention to this. But maybe it's just a lag in focus and where the industry's at, because the simple thing is solar, wind, where there's been a lot of capital and attention and experience. So that tends to be where the discussion lies. But then you think about what else does a petrochemical complex produce apart from fuels? It's chemicals. Then you think about plastics, polymers, polyurethane, polyester and fertilizer and so on. These industries are absolutely massive, and they also need to decarbonize. So if fossil fuels are going to be taken out of the petrochemical complex and will be replaced with some other sustainable input, then the whole plastics industry is going to change as well. So it does surprise me how slow that discussion has been, even with the petrochemical and chemical industries as well, around decarbonization. So these are, again, huge TAMs, huge markets, strong regulation backing them, and technology which can scale. So that's one area that we're very excited by.
Yeah, fascinating. Are the economics, though? The economics aren't there today, right? I mean, I guess maybe they are. I know it's such a broad scope of what you just described. So there's probably some areas where it is economic and others where maybe it isn't. But like replacing or creating artificial hydrocarbons, I still thought was quite challenging. but no, you see it
Yeah,
right over the horizon.
that's right. So for us, we're taking waste, so used cooking oil, agricultural waste, those sorts of things. So there are input costs, but they're low because you're taking waste which might otherwise, not have a use. And then putting that through, you're changing the front end of the refinery, but the back end is fairly similar, well, the same, and then producing basically the same outputs. So
Isn't there energy costs right? You can't just use that raw feedstock, right? Isn't there energy cost to sort of break down the cooking oils into the core
there is some. So
hydrocarbons?
it's a chemical process.
Okay,
So
yeah, I see.
you might be using hydrogen or so on in order to do that, rather than electricity. I mean, e-fuels is a different case where you're taking hydrogen and carbon dioxide or carbon rather, and putting them together.
I see. I see. Okay, yeah, you're using
So that
chemicals.
requires,
I got
yeah.
it. Got it. Got it. Got it.
So this is more on the chemical side. So there are if you like, subsidies or a green premium that is being paid, both under IRA as well as in the EU, and different countries have different regimes, but that does incentivize the production and sale of these fuels in order to meet those decarbonization objectives. So I think, like every new industry, it does need some support, particularly given, as you mentioned, the speed and the scale at which it needs to grow. But then over time, costs come down and so on, like every other industry. But at this point in time, we're only at the start of this wave. We're not at the end. So it's not like we think that the regulatory framework is going to change overnight. In fact, it's only going in one direction at the moment.
Yeah, no, it comes back to what you talked about, coming from a blank sheet of paper. And you actually, I don't know if you even intended it this way. You said, like, every industry, right? Every business, the only way to create, otherwise it's giant game theory on who goes first and who pays the green premium themselves will never even start, right? And I kind of feel like that's the cliff everyone's standing on. And so
Yeah.
you need those government programs. And I think this idea of the transition being fast, effective, and cheap is totally ludicrous. Like, that's just not how it's not how economics work, right? It's not how supply demand works. If you want it fast and efficient, it's going to be a bit pricey.
Yes.
But that doesn't win votes. So I'm very curious to see. You mentioned the UK as an example that has a very, and it wasn't a great report here just this week, right, on their progress. Uh, there's going to be some conflict. It's been very easy to be net zero. It's going to be hard over the next 5 years, and it'll be interesting to see who's really committed.
Absolutely, but I think generally speaking, policy is all going in the right direction, and every month, every year, there is more and more regulation supporting net zero. We can always complain that this is not going to happen fast enough or that happen, but I think generally speaking, it's all going in the right direction. And now you have consumers, investors, industry all supporting net zero as well. So it's one of the things when everybody is talking about the same thing, you know it's eventually going to happen. Maybe not in exactly the way that everyone's prescribing or in the same time horizon that we would like, but it does feel like it is happening.
Yeah, there's definitely momentum, and again, sort of the theme on the telco side, right? That part of the industry, or that part of energy use, I think, is sort of leading the charge on scope 2 and now even scope 3 emissions, and thinking about that. So that's got to be kind of an interesting corollary to your background.
That's right. Well, I mean, putting aside just energy, the composition of energy, and thinking about this wider issue of transformation, the whole circular economy is the other aspect of business model innovation that I think also needs a lot more attention and a lot more thought. So what do all those kind of non-energy companies do, apart from just taking more clean energy? How can they change their business models to use less resources, to have more of a closed loop, and recycling and making that whole process a lot easier, and or changing even the way that they sell or produce, so the rental models and things like that, so infrastructure as a service, those sorts of things, which enable recycling and through ownership and control of those assets, having a different business model. So there's a lot of business model innovation that also needs to occur in order to reach that net zero. target, which is kind of in addition to just the pure changing of the energy mix that we talk a lot about. But that's not going to be enough by itself, because we also need to consume less energy more efficiently. And so digital technology and innovation and business model change will be a big part of that to be more sustainable long term.
Yeah, no, I couldn't agree more. And that was part of why I was picking at your sort of experience versus innovation, right? Because sometimes it's hardest for those folks to think about innovating differently. You know, I still run into people here in the US that think about, oh, the way projects get built is I sell a product to a utility and they go build it. And, you know, my background's all deregulated and independent power producer development efforts. And I think that pendulum has swung pretty dramatically.
I think that is the one advantage in private equity or being a financial investor on the outside, is because you don't have a vested interest in the way things are today. Your interest is in generating returns and finding the most effective way to do that. So that might mean an existing business needs to be discontinued, which might be too radical a thought if you're in the industry. And shift resources to another one. But as a financial investor, you can make those sorts of decisions.
Yeah, fascinating.
More easily.
Yeah, right. Hard to tell the company that, but you do have, you see maybe a different angle of the chessboard, so to speak. Yeah, really cool.
Yeah.
Okay, well, what are I guess I kind of asked you about the theme, and it was a good one. What in your team do you feel like kind of gives you an edge versus all of the capital providers that are seeking kind of similar types of projects?
Yeah. As I mentioned, we've been industry experts focused on the energy sector for decades now. The team's been together for a long time, 10 years, so it's quite cohesive. We've been through multiple cycles, multiple different themes and trends, and together with the GE team provides a unique skill set. The GE team obviously have their operational value-added approach, Six Sigma and supply chain, all those sorts of things that they're really good at. And so when we look at a particular industry, it comes with at least a deep sense of both history, contacts, relationships, but also a way forward. And I think that's the thing that the team's very good at, is finding, what is the way forward in partnership with those portfolio companies and organizations, how to grow, debottleneck, de-risk their projects, their assets. And I think, as I mentioned, the things that we look for in portfolio companies: excellence, passion, compassion. I'd like to think that our team walks the talk and exudes the same things, and so attracts the same sorts of people around them, because they have the same values that we do. And then when organizations with common values come together, then magic can happen. So we don't work with everybody, and not everybody wants to work with us, but the people that do for our particular areas and the verticals that we tend to specialize in, we go in deep and have a strong depth of, but not only knowledge of that particular industry, but the ecosystem around it, and the challenges and the technologies that might be opportunities. We go in deep, and together with that knowledge, as well as, I suppose, the way that we do business, that combination, I think, is, at least in the energy transition space, not widespread, I would say.
Yeah, amazing. Well, yeah, what a great note to leave it on. And very excited to see the different investments and change to the world that team brings.
Thank you, Michael. It's been a pleasure to be here, and thanks to all your listeners and for tuning in and spending the time.
Our leadership in science and industry, our hopes for peace and security, our obligations to ourselves as well as others, all require us to make this effort, to solve these mysteries, to solve them for the good of all men and for the progress of all people.